welcome. You're watching Money Control Pro. I'm Sakshi Batra, and this is a special webinar on stress-free trading using Heiken-Ashi charts. Now, this is a two-part webinar for Series 1. That's today. The focus will be on understanding the Heiken-Ashi charts. But first, I want to thank all our Money Control readers and viewers for making MC Pro such a huge success right in its first year. We now have a family of over 2.5 lakh subscribers on MC Pro. So please do keep sharing your feedback about MC Pro on Money Control Pro at nw18.com or through all of our support forms as well. Now, joining us today in this webinar is Vishal Kshatriya, who's a market expert at Money Control. Welcome, Vishal. It's so good to have you with us on this Friday evening with us.
Thank you, Sakshi.
Well, before you begin your presentation, Vishal, let me just share a brief introduction about you with all our pro subscribers. So Vishal is a chartered accountant by education and a trader by passion. Vishal has been trading and tracking the markets for over 15 years now. Vishal started his career as a trader on proprietary desk at Edelweiss, where he managed huge funds and deployed long and short, as well as various other low risk strategies as well. And later on, he was co-heading the technical and derivative research desk also at Edelweiss. Now, Vishal has contributed significantly in developing advanced trading platforms as well. Vishal prefers to do momentum trading and strictly follows a rule-based trading method to eliminate any kind of emotion. He does believe that if you cannot explain why you have either bought or sold a stock at a particular level, then you are gambling and not trading. So he uses Heiken-Ashi and point and figure charts for trading, and he has also developed various rules and setups which has made trading stress-free for him really. So currently, Vishal Kshatriya is actually leading the digital product team at Money Control, and he's with us today in this webinar. He will be sharing with us the insights on how can traders identify the right time to enter and the right time to exit a stock, and how can Heiken-Ashi charts really help you do all the stress-free trading. Well, with that, it's over to you, Vishal. I'm sure all our pro users are as excited as me to know what these charts really are and how can they really help us pick and choose the right stocks for trading.
Thank you, Sakshi, for a wonderful introduction. Before we start, a brief and a general disclaimer that any stocks which we discuss today in this series is should not constitute as in any advice. Also, the strategy what we will be discussing. I have been practicing this. That doesn't mean that everybody can make profits. You have to practice it. This doesn't. It's not any holy grail where you or a path to make a big profits. So let me start with the subject. Before I start in speaking about a Heiken-Ashi chart, I just want to set a small context and what actually people face in the market. So most common questions in markets today, which most of the trader and investors keep finding the answers are when to buy or sell. So when they should initiate a trade and when to exit or book profit or should I get out and book loss. Uh, Once they find the answer for this, then another questions keep coming up to the mind is what they should buy and then market kya lagta hai, which is the most common question which people keep finding out. So, in order to find the answers of these questions, there is a general belief and there is a natural tendency of the people where they start feeling that to answer this question, the forecasting of the market or forecasting the stock price is necessary. Then only we can answer this question. But I feel it's completely different. So, does forecasting market or stock price necessary to make a profit? Well, because we forecast we can answer these questions, and that's why people feel forecasting is very necessary to make profits in the market. But I don't feel so, and it is not necessary if and we will discuss this in more detail today, why forecasting is not necessary, in fact why you should completely avoid forecasting. I have something very important quote by Warren Buffett. He says that forecasts usually tell us more of the forecaster than of the future. So generally, this quote is trying to say when somebody is trying to forecast, it there is a lot of emotional bias and personal bias which comes while forecasting, and hence it tells more about that person who is forecasting and not about what actually is forecasting. This is a very very important quote, and this has inspired me and given me a good conviction that no, forecasting is not necessary to make a successful trading in the stock market. So now that most of the people feel that forecasting is necessary, and now I'm saying that forecasting is not necessary, then what one should do in markets? Well, this is what one should do. Focus on what stock price are doing currently, whether they are going up, they're going down, they're in range bound, and not what you feel or what people are talking on the street. If you try to avoid what you feel and what people are talking on the street and completely focus on what stock price are doing, then the next thing what you have to do is spend time on what you should do and not figuring out why stock price are going up or down. So if you try to focus on what stock prices are doing and you get an answer currently stock prices are going up, and we try to find the reasons why they're going up, then you are diverting your energies into a wrong direction where you're trying to find the reason. Instead of that, you should think what you should do and how you should gain from the current up move in the stock. So this is very important, and this is a must for every trader, every investor. You should focus on what stock price are doing and what they should do, and they should completely ignore what they feel, what people are talking on the streets, and finding the reasons of why stock price are going up and down. So if you try to find out, if you start focusing on the stock and what you should do, then you have to understand there is a trading approach which you have to follow, and there are two types of trading approach which broadly a trader follow. One is discretionary trading, another is system trading, which is been system trading is the uh, right today in today's world on the streets. System trading is a overrated word. People are talking a lot about system trading, rule based trading, and all. So let us understand each one by one. So discretionary trading, what is that? Discretionary trading is based on belief and intuition of the individual trader. So basically in discretionary trading, traders try to use his experience, his judgment, his intuitions, his feeling to understand what's happening in market, and try to try to find a judgment that what will happen into market. So he's again trying to go into the forecasting route. In this kind of discretionary trading, emotions play a very critical role in trading performance, because when you are losing money, your emotions tend to be fear, and when you are making money, your emotions tend to be greedy, and also you become ego. So when you have a discretionary trading, uh, you have to make sure that you have a very very strong control on emotions, because you are actually dealing with a real money over there. On opposite side, we have a rule based or objective trading, which I always prefer. We can say that rule based trading is completely based based on a system, or completely a rule based. Trader prepare a set of rules for entry and exit. So he say, I will buy a stock when this x things happens, and I will sell the stock or exit from the stock when y thing happen. He backtests this. If results are satisfactory, he will keep following this system or this rule till the time he finds that he should modify. What happens by following this rule based and objective trading is it completely eliminates the emotions while trading. We all know that emotion is one of the most important element while trading, and if you try to eliminate the emotions, our trading performance can drastically improve. So, what I would like to say over here is increase the probability of success in trading and investing with rule based trading. Try to completely avoid, or if you are a beginner, try to try to gradually avoid the discretionary trading and try to completely switch to a rule based trading. Once you do that, what actually is happening is you are shifting your focus from forecasting to following a trading signals and systems. So we know that discretionary is more about forecasting and rule based is more about following the signals, and that's what we can do to increase our probability of success in trading and investing. So now let us have, after having discussion about what challenges actually traders and investors face in the markets while trading. Let us switch our focus on our subject matter today, which is Heikenhashi chart or Heikenhashi a better candlesticks. So by learning this, we are actually trying to change our trading approach to a more objective in nature. So, what next? In next 60 minutes, these are the six topics which we are going to discuss about: understanding Heikenhashi charts, trading setups for bullish as well as bearish. Then we are going to discuss a rule of when to buy and sell. This will help you to clearly answer the question when you should buy and sell the stock. Choosing the right stock to trade. Now, this is a aspect which has been completely ignored by a lot of traders and investors, where they miss to find the time of understanding which are the right stocks to buy and which are the stocks which one should ignore. We also will also throw some light on pyramiding, which actually helps to boost your trading returns and performance, and portfolio stock when to exit. Most of the people, they feel once you add a stock in a portfolio, we should keep holding it, and then there's emotions of greed and fear which keeps niggling them while they hold the stock. So these are the six topics what we are going to discuss today, one by one. So let us start with understanding Heikenhashi charts. Before I discuss about different types of charts, let us understand the most common charts which are being referred on the street right now or by most of the traders. A line chart, which is a simply plotted by using a closing price of the of the stock on a daily basis. We have a candlestick chart which is been used by most of the trader, and I'm sure the anyone who is using charts today, they must have surely be using the candlestick chart. The third type is a bar chart, which is also very similar to a candlestick chart, but visually little bit different. So, what does the Heikin means? Heikin means average and Ashi means speed. So, so what exactly Heikin charts are trying to do? They are trying to average out the momentum or the speed of the stock moment. Why one should prefer to Heikin candlesticks? These are the four most important part or four more important objective because of which I have switched to Heikenhashi chart. First is it completely reduce the noise. Second is its objective in nature. It helps to create the entry and exit rules very easily. It's very simple and visually very easy to understand. We will come to it. We will see the actual charts, and you will all agree that yes, it's very simple and very easy to understand when you actually see the charts, and it can be used for short, medium, as well as long term. So before I try to show Heikenhashi candlesticks and chart, first for the beginners, I just wanted to show this slide, which is a normal traditional candlesticks, how it is plotted. So you can see over here, the green candlesticks, we have a body, we have a shadow, upper shadow, and we have a lower shadow. And if it is a green, then your will be greater than open. And for the day, stock will make a high and low, which is being plotted using a wick or a shadow. Same way, if stock has closed negative, then the candle color is generally red, and open and close would be less than open, and whatever high and low stock is made for the day is plotted using the wick and the shadow. So this is how our normal or traditional candlesticks are plotted and used by a trader. Let us understand the Heikin-Ashi candlesticks. We have only three types of candlesticks in Heikin-Ashi. One is bullish, second is bearish, and third is doji. So what is the definition of a bullish candlestick? Any candlesticks which has open equal to low and green in color with no lower wick or shadow is known as a bullish Heikin-Ashi candlestick. Any candlestick which is red in color with open is equal to high, that is no upper shadow, that means it's a bearish candlestick. Any candle which has a wick or a shadow on both the sides, it is termed as a doji or a trend exhaustion under Heikin-Ashi charts. So broadly the Heikin-Ashi chart, the world of Heikin-Ashi charts keep revolving in these three types of candle only. Unlike the other traditional candle where we have a lot of different types of candlesticks like hammer, bullish engulfing, bearish engulfing, dark cloud cover, island reversal, the world of Heikin-Ashi is only these three candles, which makes them very simple to understand. Let us see how Heikin-Ashi charts look like. So this is a Heikin-Ashi chart, and you can see the stock has been going up, and there was a minor correction in the stock. What is the observation over here is we can see only three types of candle. So you can see over here most of the candles are of which are in green color over here are open equal to low, so this is a bullish Heikin-Ashi candle. There are some dojis which is in red as well as green, which indicates the trend exhaustion, and we have a third type of candle which is open equal to high, which is bearish. So a Heikin-Ashi chart revolves around only three types of candle, which is bullish HA, which is bullish Heikin-Ashi, bearish HA, which is bearish Heikin-Ashi, and a doji. So now, one thing which, because it has only three candles, we have to understand how Heikin-Ashi candles are constructed. Before I go into this formula, please try to understand. You don't have to mug up this formula because the charts are readily available in all the softwares which is available in markets today, and you have to just refer this. Why I'm discussing this, because you know that what are the actual inputs of Heikin-Ashi. So the open of the Heikin-Ashi candle is constructed as average price of open and close of previous candle. So it is open of t minus 1 and plus close of t minus 1 divided by 2. Same way, the close of the Heikin-Ashi candle is the average of open, high, low, close of the current candle. High of Heikin-Ashi candle is maximum of high HA open or HA close. The low of the HA candle is minimum of low HA open or HA close. So this is a formula basically because it is using input from the previous candle. It is trying to slow down the momentum or a speed of the price at which it is going up and down. One important factor which you have to consider over here and you have to understand over here is OHLC of Heikin-Ashi candle is different than a normal candlesticks, and hence the actual price of the Heikin-Ashi candle will be different from the actual current market price. So you have to try to understand that if Heikin-Ashi candle shows you the open value as 100, the current market price can be different, and it can be 101, 102, or 98. And this is one of the most important feature which trader miss out to understand, and then they feel that something wrong is happening with Heikin-Ashi. Please understand whatever charts we are going to discuss today, uh, and whatever open, high, low, close, what we are going to see today, those are Heikin-Ashi candles, open, high, low, close. The current market price would be slightly different than the Heikin-Ashi high, low, open, and close. And this should not be a cause of worry because this difference is not going to be so big that it influence and affect your trading and trading performance. What are pros and cons of Heikinashi? Well, Heikinashi charts have only three types of candle. It's visually easy to understand. Third point, which is very important, it's narrow down the volatility and reduce the noise. It detects a strong trend. It calms down the nervous mind on when to exit. This is very important. And it eliminates the false signals, which a lot of time can be seen on a normal candlestick charts. What are the cons? Sometimes it's a slow mover. Confirmation of buy and sell can be a little bit late, and so sometimes SL in this trade or a stop loss in this trade can be a little bit higher. High Kanashi charts and candles can be a boring for a trader who is looking out for a thrill in the markets. Well, over here, all the trader investors, we are not here to find a thrill in a stock market. We are here to make money. So I think the second cons should be fairly okay to everyone. Well, where to see Heikenhashi charts? I would say Heikenhashi charts are available on all leading applications and websites. The only thing what you have to do is you have to select the chart type as Heikenhashi and change the normal candle to a Heikenhashi candle. Well, uh, very soon Money Control is also going to launch the advanced chart where Heikenhashi charts will be covered on the both money control site as well as app. Haikinashi trading setup. Now we are going to discuss some of the very important aspects of Haikinashi, and I want everyone to please pay a maximum attention because this is where the foundation of Heikenhashi charts is. At this point of time, I would like to say charts don't speak, they scream. The only thing is you have to understand the charts language and start talking with them. Most of the time, we try to ignore the signals given by the chart, and then after we see a historical chart we can say, oh, you know what, its chart must have already given the sell signal, but we have ignored those signals because we were too busy in identifying what people are saying on the street or why stock price is going up and down. What I would what I would like to say to all over here is start talking with charts because they scream a lot. It's just that we have to keep our ears open and listen to them. So we have a bullish trading setups on Heikinashi. We have a four bullish trading setups over here. The first one is when we have a series of green candle with open equal to low, we will say it is a bullish trend as per Heikinashi chart. Please understand, it's not just three, it could be a series of any number of candles where it is open equal to low and it's a green in color, then we will say the trend in the stock is bullish. When we have a series of bullish Heikenhashi candle with open equal to low and we start seeing that the height of the candle is increasing, we can say that bullish trend is getting stronger. After that, if we see that the height of the candle are gradually decreasing or we see a dodgy kind of candle, we will say that bullish trend is getting weak or it is getting exhausted. Number four, when we have a series of red candle, which is a bearish Heikinhashi candle, and then suddenly on a next day we see a bullish candle with open equal to low, we will say that stock has seen a reversal, which is a bullish reversal. The same setup we have for a bearish side when we have a series of red candle with open equal to high, that means that the trend in the stock is bearish. When a height of this candle is increasing, we will say that bearish trend is getting stronger. That means that bears are taking a stronger grip on a current down move. After this series of downtrend, if we see a height of the candles reducing or a dodgy candle, we will say a bearish trend is getting weak or it's getting exhausted. Similarly, the way we have a bullish reversal, we have a bearish reversal where stock is seeing an uptrend with a green candle of open equal to low, and then we see a down move which is open equal to high. This indicates that a stock has seen a reversal which is on a bearish side. So this is a Bible of Heikenhashi chart. If we understand these 8 setups, we will be able to talk with the chart and ignore completely the outside noise. So let us now, this is a chart which I have shown previously. Now let us understand the chart. Now that we know 8 type of setups, 4 bullish and 4 bearish, let us now try to understand what this chart is trying to say. So over here, bullish trend is getting stronger. So you can see this is a series of green candles which indicates a bullish trend, and then a height of the candles are increasing, which indicates that bullish trend is getting stronger. After that, we have seen a height reducing and also a doji candle, which indicates that a trend is getting weak or exhausted. Well, over here there could be a lot of other news which will be coming into in on the streets, and a lot of people might be talking something else. The charts are saying something else. And then after a series of exhaustion or a doji, we have seen a bullish trend getting resumed again. Well, this is a screaming point on chart which says that after a rally, I have taken a pause, I have taken a break, and now again I am starting a fresh rally. Generally, what happens is if we are holding a stock from here, and couple of days if stock don't go up, and then suddenly one day we see a move, the general emotions work in a direction that आज मूव आया है, आज stock ऊपर गया है, let us go and book the profit. But what the charts are saying is bullish trend has resumed right now, and we can expect a more up move in days to come. And this is a screaming point. If you would have listened to this chart, you would have never booked profits over here after a confusion over here. You can see over here, after a bullish trend is resumed, we have seen a height of the candle increasing, which indicates that the trend is actually getting stronger. And after that, we have seen a bullish trend again getting exhausted, getting weak, and followed by a bearish reversal, which is open equal to high. We have seen 3 4 days of correction. Well, what generally people do is stock has rallied from 100 to 200, just an example, and now stock is falling down. People will start feeling that stock has now in a correction mode. The rally in the stock is over, and let us go and short sell this stock because stock to bahut bhag chuka hai. Well, it doesn't work that way. The second screaming point, what we can see over here is bullish reversal of this uptrend stock. Once we have seen a correction where a weak hands or a weak bulls are out from here, stock has given a reversal on a bullish side, and again this is a screaming point for the chart, which says that I am a winner, I'm in uptrend. There was some minor correction, and now I'm again going to resume my previous trend, and which is depicted by a bullish reversal setup which we have discussed. And you can see after that continuously stock is making open equal to low candle with a green in color, and height of the candles are increasing. So let me just tell you, if you must have entered over here, the tendency would be 3 to 4 days stock has been going up, let me book profits over here. But the situation, if you are referring to a Heikenhashi chart, the situation could be completely different, where you refer a chart and understand its language, which says chart is bullish, chart is saying bullish trend, we should not book the profits over here. In fact, when stock goes up very high, we will say on this day that bullish trend is actually getting stronger, and there is no way I should book a profit over here. In fact, I should hold my position. Well, this is a very general psychology of the people. When they buy a stock, couple of days stock goes up by 1 or 2%, and third day when stock goes up by 4%, they feel I'm happy with the profits. This is very satisfactory profits for me, and they exit from the trade. But the charts are completely saying a different picture. High currency charts are actually saying bullish trend is getting stronger, which, so when you read a chart and start speaking into a language of the chart which says bullish trend is getting stronger, immediately your mind will say that how can I sell a stock when a charts are saying that bullish trend is actually getting stronger. So this is a world of high currency chart where each and every candle you can say and you can predict, or in fact you can judge that what is happening on the stock or what is happening with the markets. This is the most simple way to understand and the price movement of the stock in the market. So once you have understood how we were talking with the charts in the previous slide, so high Kanashi chart actually trades in a cycle, and this is only a three cycle in high Kanashi chart. One is bullish trend exhaustion and reversal. So let me give you one example. There is a bullish trend which is going on, and after the bullish trend there can be only two scenario: either a reversal HA, or there could be a trend exhaustion. After a trend exhaustion, there could be only two possibilities. Either a bullish trend will resume again, or there could be a reversal. After the reversal, there could be again a two scenario where a trend changes from bullish to bearish, or bearish to bullish, or it could be a trend exhaustion. So the world of Heikinasi charts revolve around this, and because it revolve with only a three kind of parameter, that makes the understanding of these charts very easy. And if we try to sync our emotions with the Heikenasi chart, we will be able to do our trading very stress free. So now that we have understood the Heikenasi chart, we have also understood how to, what are the bullish and bearish setups on the Heikenasi charts and how to talk with them. Now let us go to a strategy part, which is a various trading strategies using Heikenasi chart. So basically, I tried to divide the strategy in a two series, and series one and series two. Series one, which is today, we are going to discuss a delivery based or a positional trend following system on stock and a portfolio stock, when to exit or re-enter. So in the positional and trend following, generally what I have observed is the holding period would be up to 1 month, and we have to refer a daily chart over here. We will discuss some more about portfolio stock at a later part of today, and a series 2, which is a schedule on 31st July 2020. I'm going to speak more about a trader who are very active in the markets, who wants to trade Nifty and Bank Nifty futures, and they want to trade this for momentum as well as for intraday. Support and resistance is one of the most used words on the street, and lot of time stock come near support and resistance, but trader don't know exactly should they buy at support or not. So how to objectively buy near a support or sell near a resistance is also one of the discussion point, which we will be discussing in a series 2, which is scheduled on 31st July. So now let us start discussing today a positional trend following. So a positional trading or a delivery based trading, which is a short term up to a 1 month, a strategy which will help us to a step towards a stress free trading. Now, before I start giving a strategy of when to buy and sell, I would like to touch base some of the points over here. The trend is your friend. Now, everybody on the street know that the trend is your friend. You have to follow the trend. Well, all know, everybody must have heard on the street, everybody must have read on in the book, but few follow them. Why I'm saying this is, suppose some stocks are going up, and after it goes up from 100 rupees to 150 to 170, actually the trend in the stock is bullish. But what generally comes to a mind is, you know what, stock price have almost rallied 70% in 2 to 3 months time. Now this stock price is going to fall down, and a mind start focusing on, and energies start going in a direction where this stock is going to fall. Let us go short sell them. Instead of that, if you have been a trend follower, you should have waited for the stock to correct, come near support, and then buy near the support. Well, that's why I'm saying very few people in the markets actually they follow the trend. They, the moment they see a stock rising or in a very strong trend, they start feeling stock बहुत ऊपर चला गया है, now it will fall down, and they start focusing on going short on those stocks. So please try to understand a trend is your friend. And a lot of people, what they try to do is they find resistance in an uptrend stock and support in a downtrend stock. While to be a successful, you have to find support in an uptrend stock so that you can buy near support, and resistance in a downtrend stock so that you can go and short sell in a this downtrend stock. So please try to understand, when you are saying that you are trend followers, and if any stock which is going up, never ever you should a thought should come in your mind which says that this stock has gone up too much, let's go and short sell. In fact, a thought should come that whenever this stock corrects and come at support, I will rather prefer to buy those stocks. So now that we know that uh, trend following is one of the best technique to be a to be do a stress free trading, let us switch to our attention to which stocks to buy. Well, a lot of time what I have seen, I have met various traders and investors and people on the street. They generally don't have a list of stocks. Very few have a list of stocks which they want to track, or some trader prefer to have a fixed stocks where I will just trade in this five stock throughout my lifetime. I would suggest that would be not a right strategy, because if the trend in those five stocks goes away, there is no point that you will be making extraordinary money from them. So, which stock to buy? It is the biggest question which you should try to answer. And I would like to answer this in this one particular image. I've been very inspired with what William O'Neill has said. What seems too high and risky to the majority generally goes higher, and what seems low and cheap generally goes lower. So, to be so to put this in a very simple word, जो ऊपर जाता है वो ऊपर ही जाते रहता है, जो नीचे जाता है वो नीचे ही जाते रहता है. Any stock which is in uptrend, it will keep going up. Any stock which is in downtrend, it will keep going down. Well, very definitely uptrend will also end in the stock, but we should not keep finding that ये तो uptrend is about to end. In fact, you should chase this price, buy higher and sell higher, sell lower and further sell lower. So you have to understand that you have to find a stock which is in uptrend, which is too high, which are making a life high. These are the stocks where actually there is a buying happening, and you should also be in the same boat. So now that we know that which stock to buy, let us understand how to. So this is one of the example of one which is going up, keeps going up, and one which is going down, keeps going down. HDFCs, Eicher Motor, Bajaj Finance, 3M India, Abbott, Britannia. These are the stocks which are in uptrend for last 10 years, and you have been seeing that these stocks are continuously going up. And a lot of amateur trader or a new trader, what they try to find out is, when a top will happen in the stock, and because of energies are diverted in finding the top in the stocks, they miss out the crux of the rally, where buying all the stocks as support would have made a huge money for them. On the other side, A downtrend stocks like DHFL, Yes Bank, PSU banks, Bail, JP Associates, Suzlon, Unitech, all these stocks, they have been correcting since years and years and they have never come back. What happens generally is when stock fall down by 50%, 70%, 80%, people feel there is no room further to fall down and let us buy them and make a quick buck out of them. Well, sometimes this strategy out of pure luck may make a money for you, but it's not sustainable and those money will be taken away by the markets immediately in your next trade. So please try to understand, never ever buy the losers. You should always prefer to sell the losers and always prefer to buy the winners. Well, this is a strategy which you have to, once you digest this, it will be very helpful and a life changing moment for you in trading cycle, in your trading journey. So now that we have understood that we have to buy a stock which are in uptrend, we have to buy a stock which are making life highs, then how to find those stocks? Well, let us evaluate that step by step. First, you have to choose the universe of the index in which you want to trade. It could be Nifty 500 or Nifty 200. So, if you want to trade in a multi cap, which is a mid cap, small cap, as well as a large cap, you can prefer a Nifty 500. And if you prefer to trade only in large cap, then your universe can be Nifty 200 index. If you ask me, I personally prefer Nifty 500 index. Once you identify that I want to trade in this Nifty 500 constituents of Nifty 500 index, the next thing what you have to do is you have to identify the winners from Nifty 500. So who are the winners? Stock with a strong uptrend or stocks which are making new highs. These are the winners in Nifty 500. So how should we identify these winners? One of the simple way we can identify this winner is the 1 year performance of the stock should be more than 50%. This means that any stock which has given more than 50, which has rallied more than 50% in last 1 year, these are the uptrend stock. These are the stocks which are in momentum or they are winners in the market. Well, this is completely against the theory which normal people follow. Ki stock 50%, 100% has already rallied. Now, a cream rally or a big rally, we have missed it. There is no point now entering in the stock. It's not that way. The biggest example is Eicher Motor, where stock has rallied from 4,000 to 8,000, 8,000 to 12,000. People feel that people at that point of time felt that from 4,000 to 12,000, stock has rallied so hard, there is no room for the stock to go up, but it continued to rally and had made 25,000, and today the stock is trading at 20,000. There are enormous examples of such kind of stocks where if it keeps going up, they keep going up. So if any stock which keeps going up, those are the stocks which should interest you and you should trade in those stocks. Once you identify the winner in this particular winners from this Nifty 500 or 200 list, you can say that now these are my list and I will initiate a trade as per the signals from Heikenhashi charts on Heikenhashi chart based on daily chart. Well, we have not yet discussed the signal when to buy and sell. We will immediately start discussing from the next slide. I hope this process of choosing a stock to trade is very clear to everyone, and you have to update your list every weekend. So every Saturday, Sunday, you scan these winners, or sometime winners may not change, sometime winners will change, and keep tracking those stocks. And whenever we see a signal coming from high Heikenhashi chart as a buy, you should initiate a trade in them. So what I am trying to say over here, suppose uh, out of Nifty 500 stock, you find 60 to 70 stocks which have given a return of greater than 50% in 1 year. So this 50 to 60 stocks is your world in stock market. This is your watch list, and you should not go beyond these stocks and try to focus only on these stocks. Where can you find this list? You can go to moneycontrol.com, go to market section and a top gainer. Under a top gainer, you can see the latest feature which has been announced is you can there is a drop down which helps you to see the gainers and losers index wise. You can change this drop down to Nifty 500 and change the period to 1 year. So we will have a top 5 stocks, and if you do a view more, we will be able to see a list of all stocks, all 500 stocks with its returns over here. If you are not using, if you are not a desktop user, you can also find the same on Money Control app. Go to the market movers, and under top gainers you can, this is the latest feature what we have announced. You can, from this drop down, you can select the index and change this period to 1 year, and you can see these are all the list of the stocks and its returns for 1 year. Dixon Technology has given a performance or has risen 247% in last 1 year. Granules have risen 22 to 25%. Navin Fluorine 200%. Alkane amines have risen 200% in 1 year. ICICI Securities, that way the list is going on, and you can see some stocks over here like Laurus Lab, JB Chemicals, Rallis India, which has almost doubled in last 1 year. Now, a general tendency is if stock has risen 200% in 1 year, we have actually missed the bus. I would say no, we have not missed the bus. These are the stocks where the trend in the stock is very strong, and we have to trade in such kind of stocks as and when stock comes near support, or as and when our system or our strategy gives a buy signal. This is your world. This is the stocks which should be in your watch list, and you should not see any other stocks beside these stocks. This is what I am personally doing it, and I suggest that you can start following this, and you will experience a greater degree of stress free and greater degree of confidence while trading in such kind of stocks. Now that we have a stock list ready, our watch list is ready with 50 to 60 stocks, when to buy these stocks. So let us now discuss the strategy of a very simple strategy on when to buy and when to sell. So when to buy a stock as per Heikinhashi rules. You have a list of 50, 60 stocks. You have to track them. You have to see the charts of all these 50, 60 stocks on daily basis, and you have to find a setup where a stock is in short term corrective phase or is in downtrend, which is depicted by open equal to high with red candles. There will be a day, there will be a day where we will see that suddenly a stock price have completed its correction, and we will see a green candle with open equal to low. This is a turning point for the stock, and the moment it closes with a green candle with open equal to low, the next day itself you have to buy the stock at opening. Well, what exactly this is happening? This is one of the setup we have discussed, which says that this is a bullish reversal. So what we are trying to do is we have identified a list of stocks which are in uptrend, which are in corrective phase, and we have seen a bullish reversal in those stocks. Same way, once you initiate a trade over here, when to exit the trade? Well, please don't make any such kind of rules where whenever I make 3% or 4% or 5%, I will book profit. That is not the right way to trade. We should have a definite exit rules also when we have any open positions. So once you have bought the stock, that means stock price must be going up, which is forming open equal to low, and then there could be a series of exhaustion where it may be forming a red or a green doji, and one day you found that a stock has closed negative with bearish candle with open equal to high. Please don't exit the trade on the same day. Let the stock price close with the same candle, and next day at opening you should exit the position. So now we have a definite rule of when to buy, and you also have a definite rule of when to exit the trade. Same way, if you are a futures and options trader, and you have a list of losers in your list which are in downtrend, you can go a short sell when stock price, a downtrend stock is going up, and we see a reversal which is a bearish reversal happening, you can go and short right at the opening or the next day. And when to exit your short sell position, whenever you have initiated any position and stock price is going down and we see a bullish reversal, immediately exit on the next day. Let me explicitly tell you over here is, you may see that because you are waiting for one more day to initiate your trade, there could be a situation where you will see a stock opening with a gap up of 3 to 4%, or stock may also open with a gap down. There could be confusion. The current market price may be different. The price as suggested by Heikenhashi charts may be different. But please understand, we have discussed this, that Heikenhashi charts price are not same as actual price. You have to follow the signals from Heikenhashi and trade the actual trade based on the actual price which are going on to the markets. Now that we have also known the strategy, buy strategy and exit strategy for the stock, for both buying as well as short selling, now let us understand what is the concept of pyramiding. Pyramiding refers to adding more position to existing profitable open positions. I would like to read this again. Pyramiding refers to adding more position to existing profitable open position. Well, to a people, a lot of people, this may sound very new, where you bought the stock at 100 and if it goes to 110, the immediate question or a psychology works is, I'm already making profit. I have bought the stock at 100. Why should I buy this stock again at 110? The psychology works in such a way that I should rather book profits and take the money on table. Well, it is not the way it is. Pyramiding refers to adding your existing profitable position. Lot of people are not aware, or even if they are aware of pyramiding, they have never ever done this. And in fact, most of the people on the street, they follow the second strategy of averaging. So they add the losing position to their additional open positions. So I would like to say, never ever do averaging to your open positions. And I would I have convinced myself by saying this way, losers add losing position. If you want to be a loser, you add your losing position. The moment you start thinking that way, you will feel that I don't want to do any averaging. Well, winners add winning position. So you will start adopting a pyramiding strategy as and when you are comfortable with that. So, how pyramiding works? This is our stages. First, there is a strong trend in the stock, which is depicted by series of bullish HA candles. After that, we see a trend getting exhausted or a doji on a Heikenhashi chart, and then we see a trend resumption after the doji. We will see that uh, again, a bullish Heikenhashi candle has been formed, which indicates that charts are saying that now again the prices are about to move high. One example I would like to cover for pyramiding is, this is the stock RECL, and you can see the stock has been going up. You must have bought over here and it is going up. You can say that currently the trend in the stock is bullish, the height of the candle is increasing, the charts are screaming, the trend in the stock is getting stronger, and then we have a trend exhaustion. So now bulls are taking a break, and markets is trying to find a direction what next after the rally. And immediately after the exhaustion, we see a bullish candle over here, which indicates that a previous trend is about to resume again. What happens generally is, whenever we have such kind of dodgy day, the stock moves up and down in a very small range, and it confuses the trader, and it gives you the conviction to exit the trade from here. So a weak hand who is holding that stock and it doesn't move for 4 to 5 days, it gives you a feeling that stock is not going to work, because stock has already given a very good rally, and now let me exit and try to find some another stock. But actually, when we see a immediate bullish signal from the chart, we can see a rally, strong rally again resumed. So if you have initiated a trade over here, whenever a trend is resumed, you can add the positions over here and be ready with a upcoming trend which charts are is saying. So this is a life of high Kinashi trader. I have tried to simplify this, and this because of this life, because of this chart which I'm going to show you, I have said that trading with high Kinashi charts are actually very stress free. Now, suppose you have initiated a trade which is a buy trade as per the high Kinashi signal which we have discussed previously. After you initiate a trade, there could be only two possibilities. The first possibility is uh, you see a doji or a trend exhaustion. Whenever you see a doji or a trend exhaustion after you have initiated a trade, you don't have to do anything. You have to just keep riding your positions. Or a second possibility after you initiate a trade is a bearish candle with open equal to high. This indicates that the stock is about to reverse. The third possibility, after the doji, what we can see is, after the series of doji, we can see a bearish candle. So again, I'm trying to repeat the same. After you initiate a trade, there can be only two possibility. One is doji or bearish Fibonacci candle. After a doji, there could be two possibilities. Number one is bearish Fibonacci candle. So if you see that after initial trade, we have a bearish Fibonacci candle with open equal to high. It is very simple. We have an exit strategy already defined. You will exit the trade at next day opening. So what you have to do is exit the trade immediately the next day. Now, after the doji, there could be one more possibility which says that a bullish candle. This indicates that a previous trend is about to start. That means that now a bullish trend is again going to start in the stock, and a chart is screaming and talking to you that hold on to your positions. Price are again start moving higher. In this case, either you keep riding or add more position, which is pyramiding. I would again like to discuss this slide with you, which is a life of high Kinashi trader. I feel this is very important, and that's why I want to reiterate this. You initiate a trade or buy a stock as per the signal given by Heikin. After that, there could be two possibilities, a doji or a red Heikin candle. After the doji, there could be one possibility, which is bearish Heikin candle. In either way, you exit the trade at the next opening day. And after the doji, if you see a bullish candle with open equal to high, which indicates that trend is about to resume, what we have to do is you have to keep riding your position or add more positions over here. Well, because of this life cycle, because of this cycle in a trade high currency chart trading, the life is very simple and stress free while you are actually trading in the markets. Let us now evaluate some of the recent trades which are based on high currency charts. So what I have tried to do is, whatever trades which has been generated in a month of May and June, or maybe in latest July month, I'm trying to plot the charts and give you examples of how they have performed. So the stocks which I'm taking over here is from the list which I've shown previously, which are top gainers from NSE 500 index for the period of 1 year. You must have seen the Adani Green was one of the top gainer in that particular list, and in the month of May, or just at the April end, it has given a buy signal, and you can see after that buy signal there is a doji which indicates the exhaustion. Then there is again a buy signal, exhaustion, again a buy signal, exhaustion. In this full rally, it has never given a sell signal, it has only given a buy signal. So if you have bought this stock at around 200, where the first time it has given a buy signal, and if the stock has rallied to 250 over here, there is a tendency that let me book a profit. I'm already getting 50 rupees in a stock which is worth 200, very decent return. But if you see over here, high currency charts are saying that the candle which has been formed is bullish with open equal to low. There is no question of booking. You have to keep riding the rally, and you can see stock has given an exit at around 400 or 400 levels, with giving a returns of 122% in 64 days, which is almost 2 months. So after the strong rally, the first time it has given a bearish candle, you have to exit the position the next day opening. Alkaline amines, this was the second stock in that particular list, and you can see from month of April to July, it has given a buy and sell three times. So you can see over here a bullish candle has formed, and next day you will initiate a trade and keep riding this trade unless and until you don't get a exit signal. And over here we have got a candle which is open equal to high, so next day you will exit. So in a 1 month, which is 35 days or 25 bars, which is 22 trading days, we have gained around 55%. And after this consolidation, stock has again given, or high currency charts have again given a buy signal by forming open equal to low or a bullish high currency candle. And you can see the rally in the stock again was around 29%, and it is given exit. Same way, when once you were given exit, stock was not moving much there, and there was a confusion over here, and a third signal was given. I guess it was in the first week of July, and that trade has also given around 11.7% returns. Please understand, these returns are pure absolute returns, exclude, and it does not excludes any brokerages or any other charges. The third stock, which this was actually the first stock in our list, was Dixon Technologies, and you can see it has given a four trade in last 3 months, where first trade was in April, and it has given a returns of around 30%, and then there was a corrective phase. After this corrective phase of 4 to 5 days, we have seen again high currency charts have given a bullish signal over here. So you have to initiate a trade the next day, and you know what, after you have initiated a trade for next 5 to 6 days, stock was moving in the same range, or it didn't move only. Lot of time when you buy a stock and it did move, it gives us a lot of discomfort, the stock is not moving. But when you are referring to high Fibonacci chart, we can immediately say yes, stock is not moving because there is a doji, there is a confusion, there is an exhaustion, but there is no signs of bearish candle. So I will keep holding my position. And then after this consolidation, we have seen a good rally, and which has gave almost 20% returns. After this rally, again stock corrected and given a one more signal, which has further given a 16% returns. And a fourth buy which is given in the month of July has is somewhere near 5800, and right now stock is trading around 7500. And as far as I recall, today stock has also made a new 52-week high today, and stock is right now in the money by almost 30%. So this is how the stock has rallied from 3500 to 7000, and Heikenhashi charts and the rules what we have discussed help can help us to ride this rally very smoothly and very stressful, very less stress. Granules, we all know this is a stock which has been buzzing since last 10-15 days, and it was also in our top list of greater than 50% return in 1 year. It has given a trade in the month of June, mid-June, again a 30% trade. You can see over here, after giving a trade, there is a doji, then there is a bullish candle, again there is a doji, then a bullish candle with highs increasing, and then there is a bearish candle. So next day you will exit the position, and it has given us around 27%. After we exited the position in span of 2-3 days time, again stock has given a signal, or a chart has given a signal that bullish candle is formed, go ahead and buy, and this position is still open, and currently it is fetching around 29% returns. Escorts, again in a month of May, it has given a trade which is almost 32%. Same way, now I'm not discussing individual and individual trades. Again, after this bullish candle, we could have initiated a trade and exited over here, and 15%. After you exited within a span of 3 to 4 days, it has again given a fresh signal, and right now the trade is open in escorts. Coromandalam International, the stock has given a trade in a month of June, mid-June, at around 642. Today it is trading at 820. You can see after you have initiated a trade, almost 10 to 15 days in June, July month, stock has been forming a doji, and there is a lot of confusion about what is going to happen in the stock as depicted by Heikenhashi chart, and trend has resumed. This gives a conviction, or charts is saying that a previous rally is about to start in the stock, so please hold on. Muthoot Finance, again today this stock has made a new 52-week high. You can see over here the trade has been initiated in first week of June, which has given 36%, and recently 4-5 days back, stock has also given a buy signal, and currently it's open right now. Danuka Agritech, a same story, which has given a 50% return, and again currently the trade is open with a 20% M2M. Taurus Lab, same story over here. Somewhere in mid-May, it has given a buy signal, and we have to hold this position for 1 month, 25 bars or 36 days, giving a 23% returns. And right now, mid of July or somewhere at around July 5th or 7th, the stock has given a buy signal and it's open with 31% return. In fact, this stock has made 52-week high today, and it was, I guess, up 4% today. ICI Securities, a same story over here. The stock of the day or a week or a month, Reliance Industries, you can see over here, it has also given a multiple signals. From the month of May, it has given a buy, have given a return of 25%. Further in June, it has given a buy, and this buy position was open for almost 2 months with 30%. And on Monday itself, I guess this is the last Friday, a fresh signal was generated, and today also the stock have seen a very good rally. So this way, Heikenhashi charts and a system what we have discussed today helps us in riding the positions. Balkrishna Industry, I would like to highlight this stock. Right in the last week of May, it has given a buy signal over here, and in a month of July, it has given an exit signal giving 33% returns. And after that, on Thursday, that is yesterday only, it has again given a fresh bullish Heikenhashi candle with open equal to low. So ideally, this was today was a day to enter the stock for this stock. Now, a lot of people might be wondering that can we use the same strategy for intraday? I would say yes, you can use this strategy for intraday, but you have to choose your own time frame. But the returns and success ratio, what we have discussed, would be different. I prefer a time frame which is 15 minutes or more. Also, the stock universe has to be choose wisely. Now that we have discussed the strategy for positional trading, let us discuss the strategy for your investment stocks or a portfolio. It is often said that money in markets are not made from a precise entries but by definite rule of exit. It is when you exit the stock is more important than when you enter the stock. So greed and fear is a psychology which keep niggling the portfolio investor. If they are making a return of 100% in stock, they feel this stock will give 200, and this is a greed. And if any stock is down by 50% in the portfolio, they feel that whenever I see a bounce back in a stock, I will exit. I don't want to book loss, and I'm a long-term trader. So if you have a defined rule to exit the portfolio stock, this can help us to re- improve our performance quite a bit. So what we will do is we will refer a weekly chart instead of daily chart for our portfolio stock, and when to exit our portfolio stock. When a bearish reversal Heikinashi candle is formed with open equal to high on a weekly chart, we will exit the position. We will not. So in a way, what I'm trying to say is, for our portfolio stocks, if any stock is having a bearish candle with open equal to high on a weekly chart, we will not hold those stocks in portfolio. Same way, after the series of a bearish candle, if we see a bullish candle, we can re-enter and buy this same stock in a portfolio. Well, this may feel that this may feel to a lot of investors that again we are buying and selling a stocks frequently in a portfolio. Plus, please understand, because we are referring to weekly chart, the buy and sell is not that frequent. Some of the examples over here: IndusInd Bank, which has rallied from 1000 to 2000, it has given a bearish Heikinashi candle at around 2000, correcting almost 40%. Post that, again it has given a buy signal at around 1400, and again it has given a sell signal on a weekly chart, and it has fallen by 34%. And one in a month of February, March, the bearish signal has was so big that the stock has fallen almost 77%. So if you holistically or religiously follow that I will not hold any stock which is weekly bearish candle on a weekly chart having a bearish Heikinashi candle, one day you will be saved with such kind of big move or a drop on a stock. You can see the Yes Bank, multiple time it has given a buy and sell, and then one day from 245 to 46. Same way, Maruti, at around 10,000, everybody on the street was bullish, and talks on the street were Uber and Ola is driving the Maruti sales, and it has formed a bearish. But the charts was telling us a different story, where it has formed a bearish candle, Heikinasi candle, is fallen to 10%. Again, it have risen by some same 10%, and there was a massive correction of around 25% in the stock, and it has never come up after that. So this way you can keep tracking your portfolio once in a week, maybe a weekend, whether the stock has formed the bearish Heikinasi candle on weekly chart. With this, I'm ending my presentation with words of wisdom. In 1990s, one having access to information were rich, but today it's completely different. One who can ignore the information or a noise are rich. In a world of social media and WhatsApp forwards and Telegram forwards, ignoring the noise is much important, and focusing on the rules and charts and talking with them is the only way you can successfully make money. Well, this was the first series where we have spoken about stocks and Heikenasi charts. We will be reiterating some of the strategies on our series 2. See you guys on 31st July, 5 p.m., where we will discuss about Nifty and Bank Nifty trades using Heikenasi charts and many more things in series 2. With this, I'm done. And now we can have a QA session. where I can answer some of the interesting questions.
Absolutely, Vishal. In fact, it was a very extremely insightful session that you've actually just given. We already have got many, many questions for you from all our audiences. But let me begin by what I have in mind first for you. So, we are in the midst of Q1 FY21 earnings, and we actually see during earning times a whole lot of momentum in some of the stocks post their earnings if they have been good or better than expectations of the street. So, do Heike and Ashi charts give some kind of hints beforehand so that traders can really benefit in such a scenario?
Well, Shakshi, I would like to highlight one of the basic rule or assumptions of technical analysis, and that says like this: price discount everything. So a price knows everything, and if price knows everything, anything which is going to come will be discounted by the charts, be it Heikin charts or any other charts. So yes, I would say some of the most of the informations would have been covered, and a buy signal would have been generated on the chart what we have discussed today way before, if company is going to announce a good results in on the day when results are about to come.
Okay, let's move on to the Q&A session. We have a whole lot of questions. The first question from our audiences is from Pradeep. He wants to know what time frame should be used in Nifty intraday and how can we find confirmation of the trend using the Heiken Ashi charts.
Well, today in series one, we have discussed about the stock strategy. I know trading a Nifty and Bank Nifty is completely different ball game, and it needs much refined strategies and much better sophistication of the strategy. And we are going to discuss more than 45 minutes in our series two on how can we discuss and trade Nifty and Bank Nifty futures. So. The one who has raised a question, I would definitely ask him to join our series two, which is next Friday, which is scheduled on next Friday.
All right, Pradeep, hope to see you in that webinar as well. Let's move on to the second question. Sabarish has asked this question: why should we choose Heiken Ashi charts instead of a candlestick for trading?
Well, we have discussed lot of pros and cons of Heikin charts, and how Heikin charts can benefit the candle chart. First and foremost, and a very advantage of Heikin chart is it's visually very easy to understand, and we can develop a rule which is very simple: when to buy, when to sell. It's very difficult to have such kind of simple rule built on a normal candlestick chart, and that's why preferring the Heikin charts is much better than the normal candles chart.
Okay, so I hope that answers your question. Now, Sanatan Chaudhary has asked us the next question. He wants to know that is it not important to find why stock price is going up or down in the long-term investment?
Yes, everybody feels that they want to don't know the reasons why stock prices are going up. But my only contention, what I wanted to say over here is, if we divert our energies in that direction where we try to find out the reasons, then we are missing out something, which is what you should do when stock prices are going up. So yes, you can try to, once you know that when to buy and when to sell, and still if you still want to find those reasons, you can find those reasons once you are into the trade and not before the trade. Well, even if you find that reason, it's not going to help you. What I feel, what is going to help you to hold on to the position or when to exit timely is Heikin charts, because signals are generated on the price and charts, and news flows tend to come after that.
Okay, so the charts already indicate before the news flows come in, so do not miss that time, is what Vishal really has to say to you. Mani Vasagan wants to know, is Heiken Ashi chart on a daily basis or only, or do we have this chart on hourly, minute basis as well? So I think that you already answered that question, but if you could reiterate.
Yes. Heikin, unlike a normal candlestick chart, which can be plotted for 1 minute, 5 minutes, 15 minutes, one hour, Heikin charts can also be plotted and traded. In fact, how to do intraday trading on bank nifty is one of the point which, as I mentioned, is going to be discussed in our series 2. And I have also answered this in one of the slide. Yes, you can do a stock trading, intraday trading with 10 or 15 minutes time frame using Heikenhashi chart and the same strategy what we have discussed today.
Right. Let's move on to the next question then. Krishna Kumar has sent in the next question. He wants to know, is there an option to draw support resistance and pivot points in the Heikenhashi charts as well?
Well, that's the beauty of Heikenhashi. There is no need to draw any trend lines. There is no need to see any indicators. Everything, nothing is needed. What I feel is there is a lot of subjectivity when you try to draw a trend line, and also there are a lot of indicators available on charts which are generally lagging indicator, except a few which are leading. So the more, it's like the more simple we have a strategy, the more easy that we can execute the strategy. The more simple the strategy is, the lesser the stress we can have. Definitely you can combine Heikenhashi charts with various trend lines and supports, trend lines and pivot table, but I would not recommend that. In fact, I'm going to highlight how to trade near support and resistance with Heikenhashi. So I will definitely try to answer this pivot level of support and resistance in our series 2. But yes, I have always tried to make sure that our charts are clean with no trend lines and and none of the indicators. The more simple, the better the results.
Okay, so the more simple the charts are, the better the results will be. Ayushi Verma wants to know, do Heiken-Ashi charts follow higher highs and higher lows rule in the uptrend as well as vice versa in the downtrend?
Yes, after all, it is a modified version of candlesticks which average out the price momentum. It does follow higher high and higher lows, and lower high and lower lows. And what we have discussed is uptrend stocks, which who has a 1 year performance greater than 50. In fact, these are the stocks which are making higher high and higher lows on a daily chart, and those are the stocks which we have to trade.
Absolutely. So I hope that answers your question as well. Let's move on to one another question that we have from one of our viewers, and that's from Pramod. He wants to know, given the current scenario, the technical trends in charts are changing very fast. So, any suggestions do you have for handling volatility? Now, this is a very important question.
Yes, so you can see the way Heikenhashi candles are constructed. It average downs or cool downs the volatility in the stock and then forms a candle. And that is one of the biggest advantage of Heikenhashi, that it reduces the volatility or a noise which is there in a stock on a day-to-day basis, and very and clearly gives a signal of what is happening, whether it is bullish candle or a bearish candle or a doji. So yes, you can see, you will be able to see lot of noise on a normal candlestick charts with a very big shadow both on upper and a lower side. But unlike on a Heikenhashi chart, you will not be able to see such kind of big shadow unless we'll see a 10-20% move which was seen in a month of February or March.
Okay, so I hope that answers your question as well. We'll just take a few questions before we wrap up. The next question is from Vishal for Vishal. So he wants to know, should we exit at the sign of the first red candle, that's the bearish reversal, after an uptrend, or wait for multiple red candles?
Well, we have discussed this. When you are holding a position, definitely the stock must be forming a bullish candle with open equal to low, and the moment the price reverses and forms a candle which is open equal to high, you have to wait that candle to close for the day and immediately exit on the next day. However, what I would like to say over here to Vishal is, if you are an active trader and tracking the markets on a very live basis, you should wait for this candle to close till 3:15. And if you see that stock price stock is forming a bearish candle with open equal to high, you can exit the trade between 315 to 330. But this is a bit complicated, and when I generally don't prefer to have add complexity and complex stuff in a strategy. So I would say that if you are not able to understand what I've said right now, rather prefer to exit on a second candle when it forms a bearish candle with open equal to high.
Okay, so I hope, Vishal, you've noted that down before you trade next time using the Heikin-Ashi charts. Manish Shavalia has sent us the next question. He wants to know, can Heikin-Ashi charts be used on low liquidity stocks?
Well, as a rule, generally you should avoid the low liquidity stocks because a lot of time we can see a false trade happening in those stocks. And what I have personally noticed is when you shortlist a stock based on what we have discussed today, those list of stocks, none of those stocks are actually a very low liquid where you can not trade. So low liquid stocks are generally a challenge, and you should try to avoid this. But yes, low liquid stocks are also giving some signals, and high currency chart will give a good signal in those stocks also, but you can completely avoid those.
All right, Manish, I hope you take that advice from Vishal. Moving on, we have another question from Imrani. He wants to know, how can MACD or RSI moving averages be set with Heikin-Ashi charts?
While there are, well, MACD and RSI can be very set. The way you are using RSI and MACD currently on normal candlesticks, you can use the same with the Heikin chart, but with little modification. But as I said, that I try to prefer not to use these indicators and rather prefer to have a very simple strategy of buy and sell. So what I would like to say is, if you want to use the RSI or MACD over here, if RSI is in oversold zone and if Heikin charts gives a bullish reversal by forming a bullish candle, you can initiate a trade, and vice versa. If RSI is in an oversold overbought zone, then a bearish candle will help you to exit from the trade.
Right. So let's check out the next question. Manoj Ganjawala has actually sent us this question. He wants to know how to distinguish between exiting a bullish trend versus pyramiding at trend exhaustion and adding more quantity.
Well, we have to understand. So, what the rule says is, when you buy a stock, you have to keep riding the stock unless and until uh, we see a reversal. So once you buy a stock, you can see a 3 to 4 days, a series of bullish candle with open equal to low. After that, there is a tendency that the price will get tired or bulls get tired, and then there could be two scenario what we have discussed in that particular chart. The first scenario is dodgy, and a second scenario is a bearish candle. So when stock is forming a dodgy, you don't have to do anything. You have to keep riding your trade. But after the dodgy, there could be a two scenario that the bulls are actually tired, and then after dodgy, we see a bearish HA candle. In that case, you have to exit. But after the dodgy, when we see a bullish HA candle, this indicates that previous trend is about to resume again. In that case, you have to go and buy. What I suggest is, we have seen RECL chart where a series of bullish candle was there, and then there was a multiple doji, and after those multiple doji, we have seen that stock has formed a bullish high energy candle. This is where indication has came. This is where a price or a chart has given indication that again stock price wants to go up. So at that point of time, you can do a pyramiding. However, after a doji, if you see a bearish HA, that means that bulls are losing the grip, and immediately on the next day you should exit.
Okay, I hope that answers your question as well. Now, the next question is from Vinil, who wants to know, owing to price difference between Heikin-Ashi and normal candlesticks, should our entry be according to the price of Heikin-Ashi candle price or normal candle price?
So I reiterate the same thing what I reiterated at the point at the time of discussing the strategy. We will use the Heikenhashi charts for getting the signals, and we will be trading as per the actual prices. So Heikenhashi chart will help us to give signals when to buy, when to sell. Obviously, while giving a signal, it will give you the price also, but you have to ignore those price. You should rather prefer to trade the actual price. So use Heikenhashi charts for a signal and do a trade which is based on actual price.
Okay, I hope that answers your question as well. Mahindra wants to know the next question he sent is that what is your message to beginners and students who want to invest in stock market?
I would like to say, if you're a beginner, you are lucky enough that you attended this webinar today,
Sure.
because there is no noise or there is no garbage which people are saying. Just try to see this recording of this video or this webinar again twice or thrice, and try to apply this, do some paper trade, and then you will be able to understand how to go about.
Absolutely, because the way you've explained, Vishal, we must say that it's been extremely simple for everyone to really understand how to go into trade and avoid all kind of mistakes that usually are done by traders and investors who keep on following all the noise in the markets. Let's take up the next question then. Rajesh wants to know what makes Heiken-Ashi charts better than traditional candlesticks and which time frame will be ideal for intraday. It's one of the same questions that we've been getting all along.
Yeah. So we have discussed that. In fact, in one of the slides, I clearly shown that for positional trade, we will be using a daily chart, and all the examples what I have shared over here, those are daily Heikenhashi charts. And for intraday, I have also mentioned for 15 minutes and above, if you are intraday trader. So it's pretty simple. Try to use it for a short-term trading, a daily chart, and never ever trade based on weekly chart. You should use a weekly chart only to get a signals for your portfolio stocks.
Okay, we'll just then take one last question for you, Vishal, from our audience members before we wrap up this webinar session and we move on to the next webinar, which will be on next Friday. The last question from is from Akshay Deshmukh. He wants to know: should we use any indicators to supplement Heikin-Ashi chart to improve the trend probability?
Well, again, I have a same answer. Let us not add complexity to our strategy. The Let us keep it simple. The simplicity is best policy. I have always tried to keep it simple, and that's what I have also mentioned in my introduction, that if you are not able to explain clearly why you have bought the stock or why you have sold, then you are gambling and not trading. And today we have discussed why one should buy the stock and sell a stock, and signals for buy and sell. If you try to add RSI, then there will be lot of ifs and buts which will come, which will make which will make things complex, and also give a reason why you are buying complex. So I would rather try to avoid this. I'm not saying that you should not use RSI strategy with Aikinashi, but I have personally preferred to avoid that just for the sake of simplicity.
Okay, keep it simple. That's the last word coming in from Vishal. And he says that to have a stress free kind of trading, that is what he is ensured through the Heiken Ashi charts. And that is what you can also use as well. Many thanks, Vishal, for this extremely informative and interesting presentation. I'm sure this has really helped all our viewers in a way that will make trading decisions systematic, easier, and stress free for them as well. I thank all the viewers for joining in too, for sending in your queries as well. Do not forget to join us on the 31st of July for Series 2 on Heiken-Ashi charts as well. Please do share your feedback about MC Pro on Money Control Pro at nw18.com or through our support forums as well. We will keep bringing such events for all our patrons. Many thanks for tuning in.